I think I'm only gonna be live trading for today and tomorrow, and then the rest of the week I won't be live trading. Let's see. Doing consolidation while trade. So I'm not in a consolidation. This is a 5 minute time frame. I'm a high time frame trader. This NQ. Now this is your GBP USD. The watermark. Damn, I didn't mean to move that. Watermark is in the background right here. But this is not consolidation. If this is only the 5 minute time frame though. This is just a low time frame retracement for a new market structure shift. If you look at the structure, you see clear higher highs and higher lows. So this is not consolidation. If I go in the higher time frame, you see we're overall in the middle of a downtrend. Liquidity sweep on a 4 hour. I don't trade liquidity sweeps, bro. Yeah, so it just looked like consolidation because it's like zoomed in on the lower time frame, whatever. But yeah, I'm a higher time frame directional bias trader though. So if the consolidation is small on the lower time frame, I'm cool with taking that. I'm trading with higher time frame directional bias. How does it look? I don't understand that question. I'm not open to trading NQ. NQ looks trash. It's overall in the consolidation. I don't trade in because it's in a higher time frame consolidation. I don't want to trade inside that range unless the range has clear direction. But as far as NQ, the range does not have clear direction at all. Where is it? This is too much indecision. We went bullish here, then we're going back bearish below here. I don't want to sell right into a level of support. Doesn't make too much sense. We got the 4 hour time frame again. Still no clear direction. We had a higher high made up here. This is a deep retracement inside of overall range. So this is a range. I would consider this consolidation. I don't want to trade this range. For me to trade NQ or NAS 100, whatever you want to call it, for me to trade NASDAQ, I need to break out of the range to the downside or break out of the range to the upside on the higher time frames. And this looks like it's not going to happen right now. So no need to be looking at it. No need for me to be looking at it if it's not going to happen right now. Let's make this a little bit bigger. Okay. Are you about to press the trade? I'm already in the trade. I'm actively in this trade as you see on screen. Check GJ. This is my GJ chart. The GJ overall in the massive consolidation here as well. the consolidation doesn't have any clear direction. The reason why I'm saying that is because we took out this lower high here, made a new high. Then immediately after that, we then came down and took out this low. Right? This is like there's no clear direction. We took out a high, then we took out a low, and now we come back to retest the high, fail, we took out a low again. So like there's no clear direction. Because there's no clear direction in this price action, I don't want to trade inside this range. I need price to pick a direction first, and I'll take a trade based off of that direction that the market decides to go. I looked at sub below here where we have a clean range to fill to target these lows down here. Or I'll buy above here. We could have this as a first target and then another target all the way up here. And we have a potential scaling on this position up here as well. So if I don't get an entry I want here, I can take it over here. If I get an entry I want here, I can scale in here to add more risk to target these highs up here. But because price is in an indecision area, I don't really want to trade inside this area. All right, looking more left, it was cool to trade in this area because you have clean price action with higher highs and higher lows. Price took out this low here. We went bearish. Then we have a lower low, lower high, lower low. Then we took out a high. Now we took out a low again, so it started the range. So inside this range, I don't want to trade that. That looks terrible. Hopefully that makes sense. I'm strongly on a directional bias trader. So whenever the market is in inside of a tight range or even a big range, if there is no direction inside that range, where we just keep taking out highs and taking out lows over and over and over again inside that price section, I would just wait for a breakout. I won't really trade inside that range. So I'll trade something that looks more a little trendy. In this case, it was GU. Let's pull up the YouTube chat. I don't got the YouTube chat up right now. Let's pull up the YT chat. I enter. Let's go. What's good, Oliver? You want any zells with me? Are you profitable? Yes. I've been trading for 4 years. I've been consistently profitable for the past 2 years. I am fully funded over 180K. I'm almost funded 200K. 280K. But I'm already fully funded 180K. Shit feels so good, bro. Okay. What was the thing that stopped you from getting profitable? The first 2 years. I was too hyped. I saw the potential in what trading could do for my lifestyle at the time. I was chasing that. And that slowed down my progression. When I started to not look at what trading could do for me and just focused on just getting better at trading itself, then I started to see progress. First 2 years, and how can I prevent it? Don't chase the money, right? Just chase getting better at the skill. Getting better at the skill, the money will come second nature. So what I was doing was I was chasing the money. I was trying to make them $1,000 days. I was trying to make them big payouts, right? With FTMO 4 years ago, right? So that was my problem. So when I stopped looking at the money and just focused on straight percentage, then I started to see progress. and I was going from strategy to strategy back then. So like, I'll have a strategy working for me for 1 week or even 2 weeks. And that following week, if I lost that week with that strategy, I was going to a different one. So I was through that whole 2 years, I was going through the rabbit hole of strategy to strategy hopping. So once I stopped doing that as well, where I just strictly focused on one strategy and refining that strategy, I started to see progress that way too. So my big thing was discipline, being consistent with doing the same thing over and over again. I was messing up with that. Then I was trying to get rich quick, really. You think fair value gaps or works? So I think it depends on the trader. Everything works. Fair value gap works. The reason why everything works is because somewhere somebody's making money with that strategy. So to say that it doesn't work will be a lie. So everything works. It's just about how you applying it personally. Thank you so much for the information, my guy. No problem, bro. Yeah, don't look at the money. Just look at the percentage gains. If you look at the percentage gains, the monies will come second nature. And that's how I trade now, still to this day. I don't look at how much money I make per trade. I look at how much percentage my account grew. Foot cam is crazy. Bro, freaky as hell. But for me to tell you that fair value gap or orb doesn't work will be doing you a disjustice. Because somebody somewhere is making money off of it. But I don't trade it because I think it's not needed. I think it's unnecessary. To me personally. I think my strategy is a lot more simpler than fair value gaps and looking at orb. I don't, as you can see in my chart, I don't trade it with any indicators at all. I just use pure price action. 99% of the time, you're gonna see my chart look like this with just candlesticks. That's it. And my drawings. I don't use no indicators, nothing like that. You see indicators up here, but I don't use them. They be up there if I come across a losing streak where I'm getting cooked, and then I'll start throwing these on. But most of the time, which is 99% of the time, my charts is clean. This indicator is a 50 EMA. So that whatever, sell below it, buy above it, whatever the case may be. But you'll almost never see that on. If I'm getting cooked and I'm having trouble identifying price action, like I'm getting faked out between lower lows and lower highs, I would turn on this indicator, and this would just mark it all for me. So whenever you see the candlesticks are black, you should be looking for sales. Whenever you see they're blue, you should be looking for buys, but don't get faked out. Whatever. But you'll really see that on my charts as well. What's wrong? How on a way to Bro, this shit feels so good, bro. Holy. And what do y'all like to trade in the chat, bro? And let me know if y'all working on funded or y'all trading personal capital. Y'all like futures, y'all like Forex, y'all like options. Like what y'all look at, what y'all like to trade in the chat. And how many ICT traders in the chat? You trade S&P? Okay. So that's ES. Um Crazy in a sell position right now on GU. Yeah, I'm gonna sell on GU as well. So I got you as an added confluence. I trust you. I'm adding your trade. I'm adding your trade insight to my confirmation list. How many ICT traders in the chat who trade fair value gaps and them kind of concepts? I think it's hella y'all on TikTok. But TikTok is infested with the ICT traders. I ain't gonna lie. They be everywhere on TikTok. Don't hurt. In you. Never gonna let you go. How long you been trading, bro? I've been trading for 4 years, going on 5 at the end of the year. Almost 5 years. Please make you my own. How about you, bro? I just started like 3 months ago, trying to learn on YouTube and stuff. But should be confusing. What's confusing? Let me know so I can clear it up for you. I can clear it up for you right now, bro. Let me know what's confusing. Fuck, my arms hurt so much, bro. Nah, I swear it be the losses getting to me. Thinking my strap wrong the whole time. Are you profitable? Yeah, but loss you can't avoid losing. So trying to avoid losses is if you trying to avoid losses and think your strategy wrong because of a loss, then you're gonna be chasing the golden ticket strategy for the rest of your trading career. Chasing the golden ticket strategy, you're never gonna find one because there is one. Every trade has to lose. Every trading strategy has a losing percentage and a winning percentage. So trying to avoid losing is um like can't do that. It's impossible. How long did it take you to become profitable? 2 years. Like, you gotta understand, when people may have a 61 percentage, a 51 percentage, things like that, right? And that means out of 10 trades, for every 6 wins, there will be 4 losses on average. It doesn't tell you when those losses are going to come. The losses are generated completely random. I can lose this trade right now. The losses are going to be completely fucking random, right? You could out of 10 trades, you could lose the first 4 and win the next 6 and still have a 61 percentage. You could win the first 6 and lose the last 4 and still have a 61 percentage. Like, that doesn't matter. So the losses are completely random. So even if you're going to lose the streak, that doesn't mean your strategy doesn't work. It just means you lost the trade. You lost consecutively, right? That's where risk management plays a part into make sure you don't blow your account and things like that. But you're going to lose. You can't avoid losing. And the losses are completely random. It could just be a bad price action week for you. All year so far, with this, it's the 7th month. Out of all year, I had 1 red month, and that was in April. I got fucking cooked in April. But when May came, I didn't change my strategy that I was trading in April. I took the same strategy. Traded the same strategy. And then traded the same strategy in June. And I'm trading the same strategy right now. Just because I got cooked in April don't mean my strategy don't work no more. Like, they don't patch price action. I'm trying to do live stream my trades, but I keep getting unoriginal restrictions. Any help fix this? But I have no idea. Not gonna lie. I think you may just need a face cam. Because when I try to turn my face cam off, it makes me turn my face cam on, and it says, cannot disable webcam to ensure real life reaction or real life time or something like that. Whatever. So if you don't got a face cam, maybe because of that. So it could it may be reading it like you're streaming somebody else's content, maybe. But other than that, I don't know. Like, I'll have a bias and that shit will go the opposite way. So I could fix that. For one, your bias. Okay, it's okay to have 2 biases, but not in the same area. You can have a buy bias and a sell bias. That's what I have. I have a buy bias and a sell bias, but it wouldn't be in the same area. So to put that in perspective, I can show you right now on another chart. Let's look at DJ for example. I have a buy bias and a sell bias. Between where price action currently is, there is no bias, because to me, this is a decision level. Price hasn't picked a direction yet. We're overall making consolidation, right? We keep taking out highs and we keep taking out lows. So this is a decision level. So my bias will be above or below that decision level. So if I'm looking at a bullish bias, I'm only bullish until I'm not bullish until we break above this level. That's my bullish bias. My bearish bias, I'm bearish if we take this level. So in between there, I do nothing until price picks a direction. It could trade like this all fucking week. You're not going to see me sitting here trying to buy down here or sell up here, because I know that this is the decision level. It could break out at any given time. So it could be a time I'm trying to sell up here and then it breaks out. And now I just took a loss. Now I'm trying to recover my loss with this buy. And I get faked out. Something like that could happen. Or the same thing could happen down here. So while price is in between that area, I do nothing. Then I have 2 biases. My bullish bias is above this level. My bearish bias is below this level. But as far as where current price is, there is no direction. So I wait. And I have that with almost all my charts where you see blue arrows and red arrows. So let's go to EJ. My bullish bias is above here. I'm looking for buys. And if I want to sell, I wouldn't want to sell until price come down here. Even if price comes down here and starts to trade below this area, this is still considered bullish territory for me, because we overall made a new high and this is not taking out a low. Looking at the push that created this new high, breaking above this previous high to the left hand side, which will be this low down here. So even if price gives me a steep retracement, this is still bullish territory to me, and I'm still looking for buying opportunities until price closes below this low. Now this is where my bias shift from bullish to bearish. So if you getting cooked based off of your bias being wrong, pick areas where you bullish above this area and bearish below this area and wait for price to get there. That's it. So if my pro trend ID is overall bullish, like this price action is show overall bullish because we created a lower low, a lower high, a new lower low. Price went bullish here. We have aggressive high that breaks above this high and this high. That's on a 1 hour time frame, 4 hour time frame as well. Same price action. We have a new high. This was the start of the push that created that new high. I'm bullish all up here. I'm not bearish until we close below this low. So with that being said, I'm only looking for buying opportunities. That's it. Now, if price start the range here, then I would just not trade it. If price start the range here, I would just not trade it and wait for a breakout. But ideally, I'm only looking for buys until we take this low. If we never take this low, I'm never looking for sales. Unless price reacts off of this level and makes a new high here, then I would just trail this sell bias to this being my sell bias because we have a new higher low here. But until then, I'm not looking for any sells until price comes down below this area. That's how I do direction of bias. I have two biases, but based off of where price will reach where my bias decides to change. So we're looking at the GU trade, my overall bias was bearish. I had the same bearish bias over here. This was a trade I took last week, right? As you can see, I took a trade here. I hit about a 1-to-1, 1 to 1.3. Then this ended up being a break-even trade, right? I didn't even take partials off of this. Well, I took partials, but it overall being a break-even trade because I held stop loss, right? I made a video on my risk management, a TikTok video on my risk management. If you want to look at it, it's in my YouTube. Not my YouTube. It's in my TikTok videos. But this ended up being a break-even trade based off my risk management plan. But I didn't start looking for sell buys after I took a loss in the sells. I still held my sell buys because I knew that we wasn't going to go bullish long term until we went back above this high. Price never gave me that. It just gave me a retracement in the overall bearish market. Then it gave me potential sells down here and so on and so forth. But I didn't take this because I was in other stuff. So if your bias is wrong, to get better at picking bias, be more precise with identifying your higher highs and higher lows and lower highs, and have your bias based off of the overall structure of if we're making higher highs and higher lows, you should be looking at buy bias. If you're looking at lower lows and lower highs, you should be looking at sell bias. And if you're still getting cooked off of your bias being wrong, it's because you don't have you're not properly identifying the higher highs and higher lows. As long as you get correctly pick out where your highs at and where your lows at, then you shouldn't be wrong about bias. Now, I'm almost like it's like a good 80% of the time my bias is right. That doesn't mean I win 80% of the time. I could be right about the bias and still lose the trade just because the timing is off. So it's not just bias, there's timing as well. After you have a bias, you have to be precise in getting a good entry timing that supports that bias. So back here on this trade, I took sales here. I had about a 1-to-1 risk reward. I took partials, took 50% off, and then stopped me out. This trade ended up being a break even, right? My bias wasn't wrong. We still end up dropping further down to make a new low because I was anticipating that this low was to get taken out. We still made new lows. My bias wasn't wrong. Just that my entry, like my precision was a little bit off. I was a little bit too early. Meaning it gave me a deeper retracement before the initial push that I was looking for. So my bias is really wrong. And I can go over another trade that I took last week. This was GJ. This is a loss here. You might look at this like I won this trade. No, I didn't win this trade. I got taken out first. My entry was right here. This trade took me out first and then continued higher. My bias wasn't wrong. My precision was wrong. So even though I still lose this trade, I'm not getting like I had the wrong bias. Just that my timing was off. I was a little bit too early. This was a win over here. Again, my bias wasn't wrong. I was anticipating price to take out this low. This was a winning trade. After we took out this low, made a new lower high. We eventually broke this lower high over here. And now this is where the bias shifts, where you have a new higher high and higher low and new higher high. This is where I shift my bias from looking for sells to looking for buys above this area. And that's why I decided to take these buys. Let's go over another trade I took. This gold trade back here that I took last week. I have bullish bias. Again, price created a higher high. I waited for a pullback and I took buys to target this high. I was really good with this precision here. This is a good trade, create equal highs, and then we shift. Once I seen price take these lows out, I'm like, okay, let me stop looking for buy opportunities, look for sell opportunities. I waited for price to print sells or give me a sell entry. I didn't just strictly trying to sell, even though sells right here played out. Sells right here played out. Like I was strictly just waiting for my setup. My setup didn't come until price came all the way down here. I took my sell buys, anticipating that these lows got taken out. They played out. Once again, I took sells again right over here. This ended up being a break even. My sell bias was end up being wrong here. Even though I still hit a 1-to-1, but ended up being a break even trade, it reversed. So then I stopped looking for sells. I started looking for buys. But just to put in perspective, if you have the bias right, most of the time you're going to be right about the bias. If you could correctly identify highs and higher lows. After you notice that you could correctly predict the bias, even if you lose the trade, but your bias was still right, you just got to work on being precise and taking trades that support that bias. I'll tell people all the time, bro, being on the right side of the market can either go two ways. The market can either go bullish or go bearish. It can consolidate as well, but at the end of the day, it can either go bullish or bearish, right? If you could just be on the right side of the market, you already completed half of the job. If you could accurately predict the market's going to go bullish or bearish above or below a level, you completed half of the job. After that, you got to be precise with an entry strategy that lets you know, okay, we should be bullish or bearish now at that entry. And that's how I approach the market. Me specifically, I have a bias because I know the market either go up or down. So I pick my bias and wait for price to show me confirmation that support that bias at that given time during session. I take a trade, approach into that bias. Should I practice with paper trading or jump straight out there? So it's up to you. I don't tell people paper trade. I tell people go straight out there. Being as though trading is an emotional game. Demo trading or paper trading, you're not experiencing the emotions. You're not experiencing FOMO. You're not experiencing greed. You're not experiencing all that the emotional aspect of trading by just paper trading. I think trading, becoming profitable is only 10% strategy because there's so many different strategies out there that work. So trying to find a golden strategy is not even the hard part of trading. The hard part of trading, which is going to separate you from the profitable, is going to separate the profitable from the unprofitable, is the emotions behind trading, not the strategy itself. So I think if you find a strategy that is proven to be profitable by somebody that you trust as an educator, right? It could be ICT, it could be somebody, it could be TJR, feel me? It could be me, whatever the case may be. Trade that strategy and learn the ins and outs of that strategy and build market intuition at the same time while mastering your emotions and staying away from FOMO, staying away from overtrading, things like that. But that's why I don't recommend paper trading. I don't recommend paper trading at all because you don't get to experience the actual emotions that come with trading. But every strategy is legit. The org strategy seems legit. Every strategy is legit, bro. There's not one way to approach the market. There's a bunch of different ways to approach the market. It's people that trade the orb strategy and make money. There's people that trade the orb strategy and lose money. It's unavoidable. But the difference between the people that's making money with that strategy and the people that losing money with the strategy is the mental state behind each individual trader, not the strategy. It's the mental state behind those traders. People put too much emphasis on strategy and not enough emphasis on emotion and consistency and discipline and things like that. Like I could teach my strategy. I could teach my strategy to 10 people. 8 people could get it right. Actually, that's unrealistic. 8 people not gonna get it right. Okay, 3 people could get it right. 7 people are all going to trade my strategy and lose money. 3 people could become profitable off my strategy. But I teach them all the same strategy. It's not the fact that it doesn't work. It's not that it doesn't work because 7 people failed with it. It's the fact that the 3 people that did win with it had better mental state than the other 7 people that failed with it. So putting too much emphasis on strategy is going to have you chasing strategy from strategy from strategy. Just pick one strategy, learn the ins and outs of that strategy, and focus on your mental state while you're doing it. That's what I think, though, me personally. Of course, it's not financial advice whatsoever. This is my personal intake on how I think. Okay, bet, bro. Appreciate it. Yeah, I do struggle with identifying the trend. I can't tell different from the two. Okay, I can show you that right now. Let's go to a blank chart. If you see a market like this is bullish. You see a market like this, it's bearish. Now, at the same time, if you see a market like this, it's still bearish. Okay? The reason why I'm saying this is still bearish is because even though we're in a retracement phase, this retracement phase never broke above the lower high. So in order for a market to shift from bullish to bearish or bearish to bullish, it has to first break the previous lower high that created a low. So as you can see, this push down made a new low, meaning we broke below the previous low. Okay? So this is a bullish bearish market all the way up until price comes down and reclaims this high. If it doesn't happen and it starts to range here, this is still a bearish market, but it's just ranging inside a bearish market. That's it. The price can even do this. This is still bearish because, again, we never reclaimed this high. It doesn't shift bullish until price breaks this high. And now you will see something like this happening. And again, price can easily do the same thing and play around here and still be considered bullish because, again, we never reclaimed this low that created that new high. What if it wicks up to the previous high? Would that be considered a break of structure? No, closures. Closures only. Now for entries, for me, entries, I use wicks. Reason why I use wicks is because I use buy stops and sell stops. But as far as identifying structure, I would no closures only. Because you understand wicks are rejections. So let's go to hourly time frame. Let's draw out a candlestick. Okay, say we got this candlestick right over here. It could be a bullish or bearish, however you want to look at it, but we have a fucking candlestick right here, right? When you're looking at price action and you see prices pushing up and it creates this high, right? And leaves this top wick. This is not, this peak, this price point is not just the rejection. This whole entire wick is the rejection. Price is not just rejecting the high, it's rejecting this whole entire area. That's why you see I have boxes on my zone. Because mastering candlesticks, you learn that wicks are rejections. Not just the top of the wick, not just the bottom of the wick, the whole entire wick is the rejection area. So in order for price to give you a shift, you need price to close above the whole entire wick. And that lets you know we're having a breakout with the closure. If price just wicks it, right? It hasn't, this is still a rejection. Because this lets you know that this whole area is still getting rejected. So it's important to have closures. When you look at price action and candlesticks, I tell people this all the time. This is like a saying that I created. I never even heard anybody say it after me or before me. Wicks are rejections, closures are confirmations. Wicks are rejections, closures are confirmations. Not just the high of the wick, not just the low of the wick, the whole entire wick. So based off of this zone, right here, I was looking to trade. I was looking to trade as price closed below this wick. This is the wick right here that I was looking for. So even though price closed within these wicks, this is not a confirmation yet. This is just letting me know that price is trying to push down. Again, we had a pullback right over here. Again, price started to push down, closing within the zone. I didn't take a trade inside the zone, even though it would have been a better entry, because this is high risk. This whole wick is the rejection area. I waited for price to close below the whole entire rejection area, which gave me this candlestick right over here. After this candlestick, I waited for a retracement on a follow-up candlestick, which gave me this retracement right over here. Then I look at the 5-minute structure on that retracement. Then I see we have higher high, higher low, higher high. I set a sell stop as price came down to take out this low, giving me my entry. And I have my stop loss above my confirmation candle, which will be my confirmation candle will be the candle that created that closure. Meaning, if this was my closure candle, my stop loss is above the wick of that closure candle, which being up here. I could have been more aggressive and did stop loss above this high, or stop loss above this high. I could have been more aggressive, but I'm not more of an aggressive trader. I'm more of a conservative trader, right? So because I'm a conservative trader, I'm not that aggressive. I have my stop loss above this wick. But it's important to note that I didn't look, even though I'm looking for this break and retest sell based off of this arrow here. In order for me to get a break and retest sell, I need price to actually close below the lowest wick. So this is my lowest wick. I need price to close below that area. So even if we just wicked it, I wouldn't have took that trade. I needed to see closures first. Now, when it comes to actually entry, I enter with buy stops and sell stops. So I do a lot of pending orders. But that's only on a 5-minute time frame, not really a hard time frame. We're floating in some profit here. Price could come back to entry. I'm cool with that. Price can come all the way to reverse and hit stop loss. I'm cool with that as well. Because my plan states for me to take partials at this level. So I don't give a fuck what price does in here. Price can go like this for the next hour. But I don't give a fuck. Until price hits here is where I decide to take partials. If price never hits here and eventually retraces the stop loss, that's cool. That's where risk management comes into play. And knowing that I have over a 70% win rate, I win out of 10 trades, I win at least 7 of them. So if this was just one of my losses, okay, fuck it. It's part of the game. Can't avoid losing, so I'm not gonna try to avoid losing. Yeah, no problem, bro. Like, I live trade to show people how I view the markets. Right? I don't gatekeep nothing. I'm not gonna tell you I don't sell anything as well. I'm not gonna tell you you gotta buy my course, or you gotta buy my mentorship, or you gotta buy nothing, or you gotta come buy my cellular for me to teach you what I know. Right? I'm an open book. The point of me live trading is to show how I perceive the market. So, and y'all can ask me anything in the chat. It could be anything, but I will tell you. I will explain it the best of my ability. But I will only tell you based off of what I do. Yeah. Yes, I do, bro. And another thing about the way I trade pure price action, right? I trade pure price action and pure market action. That means there's no indicators and nothing like that. I just trade simple higher highs and higher lows and break and retest of those previous highs and previous lows. That's it. Every financial market has higher highs and higher lows. Literally. If I pull up ES, NASDAQ, US 30, fucking YM, if I pull up Apple, Tesla, no matter what, fucking XRP, Bitcoin, no matter what I pull up, every chart you see will have higher highs and higher lows. So I'm able to trade any kind of financial market just because that is the sole foundation of my trading strategy. If any chart that has higher highs and higher lows, or lower lows and lower highs, I can trade it just because I trade pure price action. I'm not going to say, oh, I trade crypto differently than I trade Forex, or I trade futures differently than I trade Forex. No, I trade all of them the same just because they all have the same kind of price action. That's it. That's why I think my strategy is the most versatile and most simple, because I'm not looking for fair value gaps where I need a 3 candlestick pattern, or I need RSI divergence, or I need to see the market's oversold or overbought, or an EMA cross. Like, I don't need none of that shit. All I need to see is higher highs and higher lows. That's it. Anything else is overcomplicated to me. All I need to see is price action with structure, higher highs and higher lows, and I need to see price break those higher highs and higher lows for me to get a trade. That's it. Bro, yeah, I'm looking to go that route, straight price action and structure. That's the best way to go, bro. Price action will always be king. Without, all right, how about this? Without price action, no strategy will exist. That's what I think. Without this overall data, which is price action, meaning these candlesticks is what make up price action. So without price action itself, there will be no strat. There will be no fair value gaps. Rob Smith, you heard about that? Strat Rob Smith? Nah. But without price action, there will be no fair value gaps. There will be no order blocks. There will be no RSI divergence. There will be none of that stuff. So if you could just trade pure price action, you don't need all that other shit. Because price action is what make up the other shit in the first place. Funny way to put it. I just thought about that just now. But as price come down in this trade that I'm actively in, if we come down here, I'll take parcels 50% off my trade. After that, if we get another break and retest below this low, I'll look to scale in more risk. Well, not more risk, another trade. I'll take another trade down here during the New York session or however long it takes to get down here. It's not even in London session yet, so we still got time. It's only 2 a.m. The thing with me is there are so many levels. Do you know which one that are important levels? The important levels are the highs and the lows. Anything in between those highs and lows are minor level. Hey, we just hit $350, but let's go. But let me show you. Let me show you. I'm gonna show you exactly how I mark up my chart, and I tell you what the important levels are. So I'm gonna go to empty chart, one that I didn't break down yet. GBP I'll just click the random chart that was in my watch list. I haven't broken this down yet. So at first glance, I'm saying this market is bearish, right? Reason being is we were bullish back here. We took out this low where we decided to go bearish. We have internal structure right here, putting higher highs and higher lows. We have equal highs right over here. Then this is where the bearish continuation happened, right? I use top down analysis. So my daily is bearish. So I'm not drilling daily levels though, because I don't trade off of daily levels. I trade off the 1 hour levels. I just use the daily time frame to help me pick my directional bias. So daily is bearish. What's up, Brett? All right, look. So my daily directional bias is bearish. Then I go to the 4 hour time frame. I do the same exact thing. Look at the 4 hour structure. What are we doing? Lower lows and lower highs, or higher highs and higher lows? That's what I'm thinking. So as you can see, we have clear lower highs here. So again, my directional bias is bearish. The 4 hour is bearish alongside the 1 hour. To factor out what are the important levels versus what are the ranging levels, I mark off the most recent lower high, which was the push that created this new low, and the previous low. And that will give you an overall range. I look, he just got triggered. But fucking, I can't even think. So that'll give you the overall range. After you go from 4 hours, you go to the 1 hour time frame and do the same exact thing. So I'm not telling you to do nothing different between different time frames. I do the same thing on every single time frame. The daily, 4 hour, and 1 hour, I do the same exact thing. Yeah. Are you profitable? Yeah. I've been trading for the past 4.5 years, and I've been consistently profitable for the past 2 years. All right. Look on the 1 hour time frame. I do the same exact thing. Identifying what are we in, a bullish or a bearish trend. So as you can see here, we have higher highs and higher lows. Price eventually took out these lows down here. that where the 1 hour decided to go bearish. Inside this bearish structure, now I'm looking at the bearish structure. We have lower lows and lower highs. Same thing again. You mark off the most recent high, the lower high in the 1 hour time frame, which will be this most lower high right over here, and the current low. So instead of putting a new low, I would just simply adjust this line and do it relevant to current price. Now we have this range. I'm copy trading off pros. Is that smart? No, it's not. It's not smart. I'm not even going to say yeah. I was about to say yeah, but I'm going to say no. No, it's not smart. The reason why I'm saying no, it's not smart is because you're putting your financial success in the hands of other people that you feel like are pros. Instead of learning how to do it yourself, you will be relying on the other people making money just for you to make money. So no, that's not smart. Price should bounce off of those levels, right? No, this is just me finding the pivot points in price. That's it. So now that I have all the levels on the screen, well, not the daily, I started on the 4 hour. So I have this 4 hour range where this is a decision level, right? We broke out of the decision level, we made a new low. Go to a 1 hour time frame. This is the 1 hour current range. Inside this 1 hour current range, oh yeah. So before we get that, go back to the 4 hour time frame. Look at the 4 hour time frame. This is our new price section where we have lower low, lower high, lower low. This is my most recent lower high on the 4 hour time frame because this is the start of the push that took out this low. So knowing that the 4 hour is bearish, 1 hour is bearish, and the daily is bearish, in order for me to take buys, I need the 4 hour to shift bullish first. And that doesn't happen to up here. So my directional bias is bearish. But if I do take buys, I won't take them until we reclaim this lower high. Then I go back down to the 1 hour time frame. This is the current range. I'll ask myself, I'll mark up the high of the range, will be this lower high here. Extend it left and right. Mark off the low of the range, which will be here. Simply adjust this because I will use these wicks, and now we have a closure below the range. Now, this is what I'm thinking. We just had a breakout with this 1 hour closure stick below. Now I'll be waiting for a retest and a continuation because my bearish bias sells. I don't want to trade inside this range because as you can see, this range is a decision level. We already had a break and retest. So trading inside this range is risky because the range, it already played out. Now I'm looking at trading below this range. We have 1 hour candlestick closure below. Now we have a retest. Before I get an entry, I can find my potential target. So I'll go then on 1 hour time frame. I look left at previous price action. So I'm looking at this price action area here, and I'm looking for areas that price was already rejected. So now I see we have the bottom of this range. I mark off the highest body to the lowest wick to get my overall box. Now this is my potential rejection area. Inside this potential rejection area, we do have a rejection area right here as well. So this could be a take partial or a managed risk kind of idea at this area. I reset chart, come back to current price, and go to the 5 minute time frame. Now I need the 5 minute time frame to have structure opposing to my directional bias. So I'm looking for sales. Need my 5 minutes to have bullish structure because I want to take that structure shift of that 5 minute time frame to go confluence with the overall 1 hour, 4 hour, and daily being bearish. So where does that happen at? I need the 5 minutes to go bullish first. So look at the 5 minute structure. If we have this lower low, lower high, and a lower low, I need this high to get taken out first. So instead, I'll be looking for price to reclaim this high like this. Then I will get an entry as price flip and take out the low that created that new higher high. Stop loss above that high. Then I'll look to target the bottom of the range. So to answer your question on how I find what levels to trade off of, I do the levels. I mark up the lower high of that range, the lower low of that range, and wait for a breakout supporting my directional bias. So if I'm looking for bearish, I'm waiting for a price to re-break the previous lower low. I'm looking for buys, waiting for a price to re-break the previous higher high. Then I wait for pullback into the area on the 5 minute time frame to take a trend continuation. Did that make sense? No problem, bro. So with this trade I'm in now, I did the same exact thing, right? My daily time frame was overall bullish, but we're in a deep retracement with potential to go bearish. My 4-hour time frame is bearish. My 1-hour time frame is bearish, what gave me the bearish bias. So I'm looking for sell opportunities. We gave a 1-hour candlestick closure. Give me 1-hour candlestick closure. After this 1-hour candlestick closure, I waited for a 5-minute time frame to give me a retest. On that 5-minute retest, we have clear, higher high, higher low, higher high. I waited for price to take out this low. Once price took out this low, I took a sell. My stop loss above my 1-hour confirmation candle, and I look to target our next low or my next potential rejection area. Looking on the 1-hour time frame, this was this area here. Price gave me a breakout right over here and a retest. So this is our next potential rejection area. Same thing here. We got a breakout, a retest at this area. So I'm anticipating that price could potentially reject here. So if I know price could potentially reject here, this is where I want to take some of my position off of. Not all of it. I'll take some of my position off of. Then I know we have our next potential rejection area here because we have the support, the fake out. So this is another rejection area. Below this area, we have this rejection area. So all of these boxes you see down here is where I've decided to manage my trade. Every trade that I go over, you will see the same exact setup, win or loss. I can go over a losing trade right now and you will see the same exact thing. Let's see. Okay, GJ, this trade back here. I'm gonna go over this trade right here. I'm gonna show you the same exact thing. Daily time frame was overall bullish. As you can see, we're making a new high. So I'm looking for buys. Looking at our 4-hour time frame. This was this trade right here I'm looking at. Price broke above this lower high. We have a higher high, a break, a retest of this area, a continuation. So 4 hours bullish as well. My bullish bias. So daily bullish, 4-hour bullish, going to 1-hour time frame. 1-hour bullish as well. 1 hour created these equal lows. I was trading this break and retest. Right? We got a 1-hour candlestick closure above the area. This 1-hour candlestick right over here. Drop down to the 5-minute time frame. Looking on the 5-minute time frame. Price took this low. Once price took that low, I see we have a lower low, lower high, lower low. I got in triggered right over here. So I was just a little bit early. Remember I said sometimes I enter premature? So I got in right here. Price came down, stopped me out, and then we went higher. I just got in too early. But I take the same setup every single time, no matter if I win or lose. This setup ended up losing. But what I take away from this setup is I was right about my directional bias. My directional bias wasn't wrong. This 1-hour break and retest area that I was looking to trade off of, it did hold. I was just too early. That's all. Same setup over here. I had a bearish bias. I was looking at a break and retest of these previous lows because at the time, this was the price action I was looking at. I didn't see all of this yet. So I was looking at a break and retest of this previous lows right over here. We had a breakout. I waited for a retest. Looking at this retest right over here. Drop down to the 5-minute time frame. Looking at a 5-minute time frame. I looking at the 5-minute structure where we have higher high, higher low. Price failed to make a new high. Actually, it was this price action here. Higher high, higher low, higher high, higher low, higher low, higher low. Equal highs. I waited for price to come down to take out all of these lows. I took my sell entry, top loss above this overall high, and then I was looking to target the bottom of the range, which is all the way down here. Same thing. And price gave me this break, retest, and a continuation. That's all I take is break, retest, and continuation, bro. Win or lose. I know more often than not, I'm gonna win a trade. These are all trades that I took last week and the week before that. I don't delete my position. So after I put my position, I lock it to where I don't delete it. When I clear my chart, I just press the trash can and my positions stay. So all of these trades you see here, like gold as well, these are all trades that I already took. So this was a win, this was a break even, this was a win. I took some trades on NAS 100 last week. This was a win, this was a win. This was a win, this was a win, no losses. On NAS 100. What else did I trade? I traded GJ. This was a loss, this was a win. I haven't took a trade since then. But all these previous positions you see, like back over here as well, gold, this was a loss, this was a win. They all are the same exact setup though. Break and retest, literally. You do limit orders or market orders. I do both, so it's situational. Can you explain what you said about wicks are rejections and bodies are confirmations? Yeah, I got you. Are you on Twitch live or I'm on TikTok live and YouTube live at the same time? Um, I made a video on this. Let me see if I can find the video. First section reading. I think it's on Instagram. What the fuck is that reel I made, bro? All that fake shit. I mean, I've been doing demo live just trying to find my shot. No, that's cool. But as long as you actually executing. All right, I got a video for you to watch though. I just found a video for you to watch. Hold on. That you can watch on repeat or until you understand. It's all good. All right, this video right here. Hold on. Where we go? Where we go? Oh, for one that said wicks are rejections, candlesticks are closures. This is the video for you. What was I just looking at? Was it this? Oh, wait, that was part two. This is part one. All right, here we go. I read it already. So Saga, go on my IG Reels, scroll down till you find these two videos. This would teach you how to fucking identify market structure, whether you bullish or bearish. This is market sentiment. These two reels. And the other guy, Oliver. Oliver, this video's for you. Hey Britt, what's good with you? Hey Brittany, you good, bro? I don't even know what that mean, gang. I ain't gonna lie. But hey Oliver, this is a video for you. I'm not watching that whole video. I ain't gonna lie. You got fuck. I can't talk. You got an interest in trading? All right, Oliver, look up that on Instagram, Tradeaholic Reels, and then you going. I got like mad reels. I ain't gonna lie. Beginner friendly reels, live trading reels, before and after reels, all that shit. You've been using funded accounts? Yeah, yeah. I'm funded over 180K. I'm almost funded 200K. 280K. I'm on phase 2 of another 100K right now, and I think I'm like 5% away from passing it. So after I pass, I'm gonna pass this by the end of the week. After I pass this other 100K that I'm working on, I'm gonna be funded 280K. With Stop Step, nah. My portfolio is diversified. I don't just trade with one platform. I got alpha traders and I got top one trader, not Top Step. I don't. Fuck, I can't talk. I'm not using futures prop firms. I use Forex prop firms. And if I trade Nasdaq 100, I could trade. Well, if I want to trade MNQ, I just trade Nasdaq 100. It's the same thing. Hold on. So I don't want to show too much. So I'm like 4% away from passing this 100K. And this GU trade, I'm sitting about 750 in profit. How you be building your watch list? Make 42K this. Make 42K this month. You're cooking. So I built my watch list based off of the pairs I trade. So I'm pausing music. I can't talk while I got music in my ears. I'll start singing the song and shit. And it's gonna mess up my train of thought. But how do I build my watch list? Okay. So I think it's important to trade more than one pair. A lot of people say, well, for me personally, because I'm not a scalper, right? So because I'm not a scalper, I'm more of an intraday trader. I hold my trades on average from 4 to 5 hours, right? So because I hold longer trades, I'm not really a scalper. So I built my watch list based off of more than one pair. If you scalp, okay, trading more than one pair is maybe good for you, but I'm gonna answer that question in a second. A scalper may be good for you if you just trade more than one pair. Scalping may be good for you because you just focus on intersection volume. I'm not focused on the intersection volume because I'm an intraday trader and I'm hold trades for on average from 4 to 5 hours. I'm looking to catch the whole move of that whole entire session, not just the lowest small moves in the session. I want the whole move of New York and London session, like that. So I trade more than just one pair. Reason being is I focus on the quality of the trade and not just any given trade. If a setup looks choppy or rangy, I just won't trade that price action. I'll trade something that looks more clean. So, like how I said earlier, last week I was trading Nasdaq 100. I got a lot of the trades during Nasdaq 100 inside this range, but this was before this range started to look choppy. Now, because we're overall ranging and I don't want to trade inside this range no more, I'm not going to try to force a trade inside the MNQ because this looks disgusting. I don't want to trade this kind of price action. So instead, I would just put it to the bottom of my watch list and trade something more relevant or something that looks a lot more clean, something that's more trending and not just a consolidation. That way, I filter out the choppy markets and I only trade clean setups. I only take A+ to B rated setups. No, not even A+ to A rated setup. I don't even take B rated setup. A+ to A rated setup. I don't take anything else. The way that I'm able to do that is I filter out the choppy markets versus the trending markets, and I only trade the trending markets. So my watch list is all the pairs that I'm interested in, like gold, US 30, Nasdaq 100, and then I filter them. So I break down all of these pairs, and I filter them by what's the highest probability setup versus what's the lower probability setup. All my low probability setups are at the bottom, so I'm not interested in trading that day. Anything that you see with a red like bookmark next to it is because this is something that could happen right now during this session. So for GU, this is what I'm looking for. It happened this session. For EU, I was looking at this break and retest. This retest ended up failing, but I was looking at this happening in this session. GJ, I'm looking at this break and retest. What could happen this session? US 30, I was looking at this break and retest, which is happening right now. But anything else is something that's not happening right now. Meaning, I was looking at this break and retest. This retest never got here. Looking at this break and retest, this retest failed. This not happening this session, so I'm not looking at it. So I don't look at all of these the whole time I'm trading. I only look at the stuff that I bookmark, and everything else is just like secondary appearance for like later on throughout the week or later on throughout the day. That's how I filter out the bad setups or the ranging markets versus the market that's actually trending, and I only take the trending market setups. How much can you make off of funded accounts? You go the profit factor in trading funded accounts is endless. You can make $1 million off of funded accounts. So it's endless. But you don't want to chase that. You just want to be able to get consistent profits. You're not trying to make $1 million off of funded account and off of 100K account or 300K account, whatever case may be, right? You want to build consistency. And you just start getting started like apps, things to look up for, etc. Yeah. So if you just getting started and you know absolutely nothing about trading, go on YouTube and type this type this in and watch this video. Ultimate Beginner's Guide to Day Trading FX ILXG. Click on this 4-hour long video. You don't gotta watch the whole 4-hour long video in one setting. You can watch it 2 hours a day, or watch the whole 4 hours in total, right? But if you're somebody that just can't sit through a whole 4-hour long video, then just break it down, but make sure you're writing everything down. This video is going to cover everything beginner friendly to advanced stuff. Well, intermediate stuff, not really advanced, because advanced will be more so psychology and risk management, things of that nature, right? But in this video, you will learn what is trading, exactly what is trading, like the buying and selling of contracts, things of that nature, or betting that something is going to gain or lose in value, which is buying and selling. He's going to go over that. He also going to go over Forex, what is Forex trading versus futures. He's going to go trading view. Trading view is this chart work you see here. He's going to go over, so that's quote unquote tools. He's going to go over Fibonacci retracements. Going to go over Fibonacci areas, text and sections. As far as annotating on your chart, he's going to go and draw it on the chart, meaning chart technical analysis. He's going to go over position size calculator. This is important. This is how you calculate and manage risk, on knowing how much you risk per trade, per stop loss when it comes to pips and all that stuff. You're going to explain what pips are as well. You're going to explain Forex Factory and note identifying news events. That's more so fundamental analysis. You're going to go over MetaTrader 4 and MetaTrader 5. Don't really need this, especially if you're in the United States, because MetaTrader is banned in the US anyways. He's going to go over price action. He's going to go over market sentiment, or how to identify whether price is bullish or bearish. He's going to go over chart time and trend. He's going to go over market structure, basically what I just explained, identify higher highs and higher lows, and identify how the market structure shifts. He's going to go over support and resistance and how to draw them. Everybody draw their support and resistance differently. I don't draw mine like he draw his, but this is giving you a foundation on understanding what support and resistance actually is. And then if you want to learn from me, I have videos as well showing how I actually draw my support and resistance that is a little bit different from the way he draw his. But this will just give you a nutshell on what support and resistance actually is. Psychological levels, he's going to go over that. He's going to go over candlesticks, bullish and bearish. He's going to go over how to read the candlesticks, which ties into price action. He's going to go over some chart patterns like inverted head and shoulders, double top, equal highs, equal lows, things like that. He's going to go over indicators. You don't really need indicators because I don't trade with indicators at all. Price action, highs and lows, Fibonacci retracements, back testing, most trading sessions, high volume time to trade, leverage, and some psychology tips. All right, so this is very beginner friendly. If you don't absolutely nothing, you will learn all the basics and all the way up to the intermediate stuff just watching this 4-hour long video. After that, if you watch live traders like me or anybody else, you will begin to understand what they're explaining after watching this video. Well, if I say we have making higher highs and higher lows and we have a bearish engulfing or bullish engulfing with this inverted head and shoulder, so you're not gonna understand what the fuck that means if you don't understand the basic terminology first. You're gonna get that basic terms and vocabulary words from this beginner's guide. Can you make over 20K on one funded account? Yes, you could. Any tips to be getting started like apps? I answered that question just now. So tips, go on YouTube, type in Ultimate Beginner's Guide to Day Trading and watch that 4-hour long video by FX ILXG. Yes, you can make 20K on one funded account. It's at the end of the day, it's a percentage game. It's not about how much money you can make. It's about how much percentage you can gain on that account. So for me, I try to target 10% a month. Sometimes I have under 5%. Sometimes I have more than 10%. Like April, I had under 5% where I had a losing month. So I was net negative on that April. June, I had a 15% month, right? 15% could be of whatever size accounts you have. 15% of 100K is 15K, right? So 15% of 20K is 30K. Not 20K, 200K is 30K, right? So it's a percentage game. If you want to make 20K a month, target 5 to 10% a month. Sometimes you're going to have bigger months. Sometimes you're going to have smaller months. But to make 20K a month, you want to seek the bigger numbers and funding, like 250 to 250 to 200K, 300K. Don't kind of funding. You ever blew a funded account? Hell yeah. I blew hundreds of funded account. Nigga, when I first started, nigga, I was blowing an account. I was blowing 2 accounts a week. Nigga, that shit was nothing. And when I was coming up, funded accounts are a lot cheaper now. Like to get 100K in funding in the FTMO 4 years ago, nigga, that shit was $650, $700. And I was blowing 2 accounts in a week like it was nothing. I was running through them hoes. What's the consequence of blowing the funded account? You lose your money. That's the consequence. You lose whatever, how much your account cost. So if you pay $700 for 100K and you blew the account, you minus $700. But the entry barrier for funded accounts is a lot cheaper now than it was back then. I think you get a 50K for like $50 and like $150 for activation fees, so about $200 total for a 50K. That's for features. For prop firms, a 50K account probably be like $300. Right, I'm going to take 50% of my position off here. So this, I'm sitting about 800 in profits as prices approaching this level. We tapped into this level already, so I don't want price to reject this area and come back down to stop me out for overall loss. I'm just going to manage my trade and take parcels. I'm going to take off 50% of my position and leave the rest of the position running. If you took this trade and you want to go break even, you can go break even. If you want to close the trade full here, you can close the trade full here. I just want to secure some profits, hold the rest of my trade, because I do think this trade has potential to continue down even further, to fill in the rest of this range down here. But just to manage risk, I want to take 50% of my position off and take partial profits, and I'm going to hold the rest of this trade. So I secured about 400, and I still have about 400 in floating profit on this account. How much do you risk on your personal account? My personal account, I risk 5%. So I always tell people to risk 1 to 2%. But if you don't got a big personal account, then you're not going to really make no money off 1 2%. But at the same time, if you are new to trading and you don't really have you're not really profitable yet, you're not really consistent, you don't want to risk 5% either. Just stick to 1% risk. Just because if you're new to trading, you're not trading your personal account to make money. Trading your personal account to build consistency and get better at trading. So because you're not looking to make money on your personal account, like to live off of that account, then you really want to just be risking 1% and just get good and get better at trading. But if you're somebody that's a little more well-seasoned, they're already proven to be profitable, right? You get consistent payouts, things like that. You can make consistent withdrawals. Then you could be a little bit more aggressive, risking 5% per trade. 5%, risking 5% per trade, and 20 trades, you would have doubled your account. Not even 20 trades. 10 trades at a 1 to 2, you will double your account. 10 trades at a 1 to 2 risk to reward. So you can see some decent, you can see some nice account growth for risking 5% per trade. At holding 1 to 1, 20 trades, you'll double the account. At holding 1 to 2, 10 trades, you'll double the account. So if you're trading with $1,000 on your personal account, 10 trades at a 1 to 2, that 1K will be 2K. If you're trading with 10K on the personal account, that 1 to 2 risk to reward and 10 trades will be from 10K to 20K. But if you're somebody that are still learning how to become profitable, like you don't really want to risk 5% per trade, because them 10, instead of being 10 wins, them 10 losses can them 20 losses could take your whole account. And for somebody that's new, 20 losses is real easy to come across. Trust me, I know from experience. When I was new, 20 losses was real easy. Especially being as though new traders, most of the new traders are over trading. They're not really taking 1 to 2 trades a day. They're taking fucking 5, 6, 7 trades a day. 20 losses come real quick. Let's put the business back on. I'm about to get off live here soon, to be honest. Because I already managed my trade, I don't need to sit here and watch it no more. I already closed partials, already secured some of my trade. I can let the rest of the trade do what it's want to do. I've been in the trade for about 2 hours. Actually, yeah, almost 2 hours. And already managed. We can just let this trade run and do whatever we want. I'm gonna stay here for a little bit longer. I'm gonna stay here till 3 a.m. and then I'm gonna get off. I appreciate the info for I'm gonna lock in. No problem, bro. If you want to see more of my content outside of TikTok, I got YouTube and I got Instagram where I post reels. This is my YouTube channel. If you want to watch me trade on YouTube, whether it's live trading or like YouTube videos where I post pre-market analysis. So I posted GU setup before I even took it, like Sunday morning. Live trading examples, risk to reward things, how to read price action, stuff like that. Like if you want to see all kinds of trading content as far as videos, not just live trading. When it comes to strategies, this was a year ago. Yeah, that's old as fuck. But my YouTube is Traderholic FX, and I have an Instagram as well. I think I already showed you my Instagram, but it's Traderholic Reels where I post reels. So this is my Instagram right over here, where I place live trade breakdowns under 60 seconds, entries, pre-market analysis. I used to do signals. I don't do signals no more because that shit take too much work from me. On live trading, price action, teaching videos, bullish and bearish, all kinds of stuff, bro. At the bottom, it get real beginner friendly. But yeah. I got a free Discord as well. If you want to join the Discord, the Discord will be. You can mess me for the Discord, or you can look in the YouTube description. There should be a Discord link. Yeah, so there's a Discord link in the YouTube description, or you can message me. I'll send you the Discord link. But in my free Discord, do I'm very active throughout the day, not just doing on a session. All right. In my Discord, you will see the announcements where I post whenever I make a video, whenever I'm going live trading. I would copy the link and paste it in here. So that way notify everybody. You got a chat room where other traders discuss their setups, things like that. I'm very active in here as well. So if I'm also not on live stream and I'm taking a trade, I will screenshot it and send it inside the general chat room, whatever. Like, this is a trade I'm taking. I'm not gonna be live tonight, but I'm letting you know this is a trade I'm taking, whatever. Trading ideas. If you got your own ideas that you want to post to get feedback on from me or other people, like what you think about this setup, things of that nature, you send them inside trade ideas. You want to screenshot and post your profits, do that as well. You want to talk crypto, or you want to showcase your desk setup, you do that here in desk setup as well. Funny videos for trading memes and shit like that, post them in here. But also for education, I do trading psychology. So I try to do a trading psychology tip, because I think trading is 97% psychology. So if you have a weak psychology, it's going to be hard for you to become profitable. So I post psychology tips throughout the days as well. And here where you'll be able to see risk management, strategy talk. So this is my in detail explanation on what I'm strategy and what I'm looking for, and strategy talk. And in my YouTube videos, I give you homework at the end of the videos sometimes. And this will be like where you submit your homework. So if I say, I want you to mark this up on your chart and see and do your own analysis, whatever it can be, until you submit the homework in the homework section of Discord, this is where you will submit it at. Then I will review the homework you submit and give you feedback on what you did good versus what you could have improved at, things like that. All right, so this was one of the people that submitted their homework after a YouTube video. I gave him feedback on his whole entire thing, whatever the case was. But I'm very active in Discord as well. I'm gonna stay here till 3 o'clock, and then I'm off. Already managed my trades, so no point in me sitting here. I'm not a person that sit on the charts all day. So I'm on the charts for about an hour and a half, 2 hours to get a trade, and after that, I'm going on about my day and let the trade do whatever it wants to do. Again, I don't think I said this already, but I take 1 to 2 trades a day. I'm very strict on risk management. So I take 1 to 2 trades a day, so that way I don't factor in over trading. So I try to eliminate over trading. Because I take 1 to 2 trades a day, I make sure that the first trade I take is a really high quality, because I don't want to take a second. So you're not going to see me selling for a B rated setup or C rated setup just because I'm bored and I want to take a fucking trade. Nope. I'm very cautious about the trades that I take, as you should be, because at the end of the day, you're putting your money behind it, right? You don't want to be taking any given setup, knowing that you're putting your money behind it. Also, if I take my first trade and I win, I don't take a second trade. So being as though I'm up on GU, I don't need to take a second trade. So you're not going to see me take another trade throughout the day. I want to end my day in the green, and to do that and protect my capital, especially to start the week off, I'm not looking to take another trade. Also, if I take my first trade and I lose my first trade, then I will take a second trade as the recovery trade, just to try to recover my previous trade loss and make some profit on the day. Worst case scenario, if I lose both of those trades in that same day, I'm down 2 trades, which is down 2% on my funded accounts. Also, I cap my trades off. I cap my losses off for a weekly basis. So if I take 3 losses in any given week, I will not trade the remainder of the week. I don't care if I took 3 losses by Tuesday. That means Wednesday, Thursday, and Friday, I am not trading. If I take 3 losses by Monday, I'm not trading Tuesday, Wednesday, Thursday, and Friday. If I take 3 losses by Thursday total, I'm not trading Friday. That's how I be cautious on my risk management and try to avoid blowing accounts to the best of my ability. Right? If you take losses, if I take 3 losses in a single week, worst case scenario, I take 3 losses in a row on fucking Monday, market open, or Sunday. Right? I'm down 3%. I end the week there. I come back next week and recover 3%. It's easy to recover 3%, but it's not easy to recover a blown account that you blew the same week you got it. Right? Recovering 3% is easy to do in the following week. So instead of trying to recover your trades You cover that 3% you lost in that same week if you trading. Just let the market do. Wait to get into some different price action and take different setup. Well, the same kind of setups, but at a different area in price. Meaning as though you let the price do what it wants to do. You got picked out too many times in the same area or whatever. You let price action go somewhere else and then you look to trade with new levels, things like that. It's easier to recover 3%. Worst case scenario, I'm down 3% in a week from taking 3 losses. I come back the next week and recover. Best case scenario, I win throughout the week, take wins and losses. By the end of the week, I take 3 losses. By Thursday, I end my week there, but I'm still in profit because my risk reward is what carried me throughout the whole week. I still end the week in the green and cut my week short. Best case scenario. But that's just how I trade. I'm big on risk management, to be honest. Risk management is what makes me profitable, not necessarily just my strategy. My risk management is what saves me from blowing accounts and keeps me in profit month after month. Let's say worst case scenario, I take 3 losses every Sunday, market open, for a whole month. Right? That's only down 12%. I can recover 12% the next month. And that's worst case scenario. So not only am my 3 losses a week save me on a weekly basis, but it saves me on a monthly basis as well. It's easy to recover 12%. No, not not on a month. And the monthly aspect is doable to recover 12%. But if I'm just over trading and just keep trying to chase my trades back and revenge trading, trying to get back what I lost or whatever, I'm going to be in a downward spiral. So I cap that out by 3 losses a week. That's how I cap it out. So this US30 setup out that I was looking at, this setup is playing out. We got a break. We're giving us a retest right now. I already gave us a retest back here. Actually, no, this is the candle. So we got a break right over here. It's giving us a retest. I'm not going to take it though because I already won on our day, so I don't have to take it. Same thing with GU, with GJ. It's giving us this break right now. If we get our closer in the next 1 minute, we can see a 5-minute retest. Take some sells. But again, I'm not going to take it because I'm already up. So I don't have to take it. And this is what's little stuff like this where I only have maximum 3 losses a week, where I'm up one day, so I don't take a second trade. Little this minor stuff like this, you might look at it like, okay, this is just a little detail, but this is what separates me from the unprofitable. All right, it's 3 o'clock. I'm wrapping up here. Hope everybody have a safe trading night, and I'm gonna call it a day, bro. I'm finna play the game, some shit. It's your boy Trader Holly. I'm out of here, chat. Peace. All right, bro. Tape these.